Hello everyone. Last night there was a US Fed interest rate decision. So in this video, let's look about all the details we need to know in very simple terms, and then we'll discuss our regular market report for today 18 September 2025 for the Indian stock market in terms of Nifty and Bank Nifty. If required, please pause and have a look. These are the very important future projection macros were released last night along with the Fed interest rate decision. And then in the press conference, Fed chairman explained what does this number means, where economy is going and what's their future inflation projection, etc. Before this meeting, on the anticipation of 25 basis point rate cut, S&P 500 and Nasdaq in the last 2 weeks, multiple sessions hit the all-time high value. Hence, it was very obvious we can expect some level of profit booking even if Fed performs 50 basis point rate cut, isn't it? So, what happened yesterday? Please pause and have a look. Until 2 o'clock, market was very flat, waiting for the interest rate decision with some negative bias. Then at 2 p.m. Eastern Time, Fed cut the interest rate by 25 basis point. That was not the surprise. Despite being in overbought region, the things that turned the US market positive was this future interest rate projection. If required, please pause and have a look. This kind of future projections Fed do every 3 months once. Last time it was June month. So here I formed this table comparing the old June projections as well as this new September month projection. The interest rate projection for the current year end, 2025 end, at present they are projecting 3.6%, which is 25 basis point lower compared to June month projection, which was 3.9%. There are only 2 more FOMC meetings this year, one in November and one in December. So what it's now implying is, in those 2 FOMC meetings, we can expect 25 basis point rate cut each. Earlier they said they're going to do only one 25 basis point rate cut in the next 2 FOMC meetings together. That now changed into 225 basis point rate cut, which is more market favorable. Similarly, for the end of 2026 and the end of 2027, all Fed now projecting either 25 basis point or 50 basis point lower compared to previous June projections. So this more immediate rate cut projection is positive, which made the US market to trade slightly positive. Then between 2:30 p.m. to 3:30 p.m. Fed chairman did his press conference, and during those time US market was volatile but very narrow band. Because almost all the analysts wants hawkish statement, like everyone one way or the other asked the same question, like whether he thinks economy is bad, so only Fed projecting more rate cut this year kind of. Then why he thinks labor market is okay, what's his view on inflation, and what he thinks about last very low monthly jobs data, which we discussed in detail 2 weeks ago. I will attach his press conference video in the pinned comment. If required, please watch. It's roughly 50 minutes. But for all those questions, he was calm and explained very logically. So only I think US market didn't move violently and managed to recover all the losses during the press conference. If required, please pause and have a look. This is the US GDP growth rate, Fed projection for 2025, 2026 and 2027, all increased by 20 basis points compared to June month projections. And about his statement, despite the twisted questions from the press, he said he is not at all seeing any recession, but he acknowledged the fact that the job growth have slowed and the downside risk for employment have risen. So he don't want the labor market to further slow down, and that is his priority. Then regarding inflation, this is where things were not in favor of market. He projected this current year 12-month average expect to be around 3.1%, and for next year the 12-month average as 2.6%. Both of them were 10 to 30 basis points higher compared to June month projection, and it's significantly higher inflation than the Fed target 2%. Overall, he said the present time is very challenging as inflation is increasing, economy is growing, and labor market is also weak. But he gave a kind of assurance that no need to panic as this inflation increase could be one-off due to tariff, and I think he did succeed at that, so US market managed to recover. Dow Jones alone increased 0.57%, S&P 500 was down marginally 0.1%, and Nasdaq decreased 0.33%. In case of VIX, it decreased 4% and moved below 16. in line with that future rate cut positivity. And in addition, there was an analyst report because of this AI push, Indian IT expects to get big mega contracts, which in turn made both the Indian IT stocks ADR to increase 3.5%. Even the banking ADR increased 1 to 2%. And if you see the arbitrage wise, there too there is a fresh indication of positive difference about 1 to 2% in all the major ADR and Reliance GDR. However, for some reason that positivity was not transferred to GIFT Nifty. Early morning it traded at 25,475. Equaling that with our spot market, it's indicating the gap up opening of only 50 to 70 points. Then let's move to stock specific info. SBI and Federal Bank sold their Yes Bank stake together around 15% to some Japan's banking corp for around 9,000 crore rupees. So we could say all those stocks SBI, Yes Bank and Federal Bank will be on focus today. Now coming to FII trade data, yesterday in the cash market, again FII turned as net sellers. They net sold for 1,100 crore rupees, whereas DAI net bought for 2,300 crore rupees, which was good and okay. And regarding the participant wise open interest analysis, yesterday 26% new call options and 20% new put option open interest were added. So the PCR ratio mildly dropped to 1.18 from 1.24. But still the participant wise stance didn't change much in both index options as well as in index future. If required, please pause and have a look. As a summary, US market was okay according to me, and so both Indian ADR and GIFT Nifty indicating the gap up opening. The issue for me is that Indian ADRs have risen significantly. I tried to find the reason, but I couldn't figure it out. Why did banking ADR stocks went up by 2%? I mean, from IT ADR perspective, I could understand there are clear trigger points, but I'm not sure why banking ADRs were up this much last night. If anybody knows about it, please let me know in the comment section. Then regarding stock open interest, Nuvama, Marico, ITC, Tata Elxsi, Titan, Havels and Voltas are some of the 58 stocks that got an increased open interest along with a decrease in price, indicating the short build-up. On the other hand, IEX, HUDCO, Bank of India, Godrej Consumer Product, Maruti and VBL are some of the 72 stocks that got an increased open interest with a positive price close, which means these stocks got the long build-up. Then about the things to look out, in the aftermarket hours, UK interest rate decision, and in the night, usual US weekly jobs insurance data, crude oil inventories and Philadelphia Fed manufacturing index are some of the important things we need to keep an eye out today. Coming to technical, Nifty opened 40 points gap up and was positive throughout the session, then closed at about 25,300 mark. Thus on the daily chart, Nifty formed a bullish candle with continuing the higher low formation, and also it tested the Bollinger Band upper line. In addition, the 10, 20 and 50 moving average all are trending upward, while RSI at 66 and MACD continue to show a bullish crossover, all indicating continued bullish momentum. Hence, going forward, the trend is likely to remain positive as long as Nifty holds above the psychological 25,000 mark. On the higher side, resistance is at 25,400 and 25,500. A decisive move above 25,500 could lead to an additional rally. In case of Bank Nifty, it opened flat, however, immediately increased and was also throughout the session. Thus, on the daily chart, Bank Nifty formed a healthy bullish candle and now trading above all key moving averages and the middle of the Bollinger Band. In addition, RSI also inched closer to 60, while MACD maintains the bullish crossover, both indicating continued bullishness. Hence, 55,600 to 55,700 zone will act as the immediate resistance, and a sustained move above 55,700 could lead to a continuation of the uptrend towards 56,200. On the downside, 55,300 to 55,200 zone is likely to act as the support. On the options front, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,400, with maximum new call option writing at 25,500, 25,400 and 25,300 strike. On the put side, the maximum open interest was at 25,300 strike, followed by 25,200 and 25,000, with maximum new put option writing at 25,300, 25,250 and 25,400 strike. Thus, from options data, Nifty might face the next resistance at 25,500 followed by 26,000. However, 25,300 to 25,200 zone could act as the near-term support. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.